Right, welcome, guys. Tuesday, the 18th of August, London session. It's 8:19. So we're going to look into obviously what is happening. That's obviously for first. I'm going to give obviously my overall outlook, but obviously we've got the macro tool here. Just this first line is pretty important here. The London session opens with all five central banks holding rates says steady, but the story isn't about stability. It's about what happens next. The Fed is on pause at 3.5 to 3.75, holding fire. The data emerges, ECB, blah, 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 blah. So the whole kind of I guess the actual FX data side of the market is, everyone is looking to kind of hold interest rates, because yeah, there's kind of what ends up happening. There's a chain reaction. Obviously, this war's been running since March, I think, and obviously we're now starting to see, a bit of a chain reaction in regards to everything. We've got a huge divergence at the moment between or displacement between yields and oil and the dollar, which we haven't had. All right, we haven't had that. Let's obviously have a look as well what is happening today. So we've already had some UK data. We had the unemployment rate stay where it was. It was supposed to tick down 0.1%. Obviously, we've had China tick down. We've had the US tick down. But obviously, unemployment rate has stayed where it is now. This isn't major, but obviously, could it? Yeah, it's a tricky one. To me, how I'm kind of reading this, the pound is a little bit obviously behind, um, you know, yeah, where people like China, the US are, so that is going to have an impact on pound this morning. What have we got later? We got some housing, supposed to be so Canada. We got exports. Yeah, supposed to decrease slightly, which is what you'd expect. With obviously times like this, everyone tends to tighten up a bit. Especially obviously, and this is a bit of a chain reaction from employment. So if employment data in a country isn't great, there's going to be less people in work. So what is that going to mean? Less houses are being bought, less things are being bought because obviously, we don't have that solid, stable employment data coming in. But let's wait and see. I don't think this is going to have a huge impact. Any of this today is going to have a huge impact on the US dollar. Everything at the moment is just pricing in expectation. What is going to happen. Um, let's start off with where the dollar is at the moment. All right. So I'm going to go on a 2 hourly. All right. We're going to start off with this. Then I'll go through the two pairs that I broke down yesterday. And then obviously we'll go through everything. We'll also go through USD JPY, which I've stayed away from. We obviously took a hit on that yesterday, but it is what it is. We obviously hit full TP Friday, so we can't expect obviously full TP all the time. So in regards to the dollar, we obviously cleared this yesterday. All right, cleared this yesterday. Was expecting actually 99 to be hit if the political situation was the same, but it's not, is it? It's not, and it is getting really irritating now. So we obviously had two bits of key information yesterday. We had Trump threatening Oman if they got in the way, because obviously, let's face it, the whole of the Gulf countries, region is being hit here. All right, the US are happy they've sent the guys that they want and are prepared to obviously fight this war. They've sent them over. All right, but they're here, happy, and their whole, you know, population's here happy because they know that Iran won't hit them. The worst case, they're going to hit their, navy or air force, which, I guess, in a way they're the most prepared, citizens to get hit. Whereas the Gulf countries are, they've been nice to the US. They've let them obviously put air bases up there and blah blah blah. But obviously, yeah, I think it was a bit of a kick in the teeth yesterday, but let's wait and see. And then we obviously had Iran to comebacks saying that they're not going to go defensive anymore. They've had enough. They're going to go offensive. So it's all kicking off right now. And because of that, we've got, yields back at this 4.75%. We've got oil, had a huge move during yesterday evening. Yeah, but it's starting to kind of hold. But I'm expecting this to go higher. Remember, you know, I mean, once we hit kind of 90, that will drag the dollar up. But if you look at, on a 2 hourly, all right, or the dollar here, look at the price that it's trading at. And then we've got obviously yields here. Look at the price that's trading at. And then we've got oil, look what's happened. So oil, I'm going to draw this out. So oil has had this move here, yeah? Right? We've then had yields has had this move here, right? And then we've had dollar, which has had this move here, yeah? So normally what has been happening, oil up, yields up, dollar up. All right, that is not happening anymore because there is a quite a big kind of cloud over the kind of economic situation of the US. They were going to raise interest rates. They're now going to, chances are markets are pricing in that they're going to keep this stability. But obviously, I don't know if war escalates. Their obviously decision, might be changed. Remember, this is just expectation being priced in. It's just everyone hopping on the band wagon. There is no data out yet, and anything could change at any time. I'm expecting a potential change if obviously if oil is pricing around this area. Now the interesting thing is Trump wants lower interest rates, so it's not actually in his interest to drive oil up to a point where it's going to be out of control, because obviously that's then going to cause stagflation, and it means they're going to have to raise interest rates to kind of you know battle what's happening and ride out this horrible storm. So it's a real, I'm in kind of two minds about everything. Do I want to buy the dollar? No. Do I want to sell the dollar? No. So we've got to then think of, right, what is the overall kind of, best play here, So let's obviously go through USDJPY. All right, we took an L on this yesterday. Had our chances here. That there was one chance to get out. I did pretty well on gold yesterday, so that's why I was happy to kind of stay where I was. Remember, three positions here. We had one here, and one here. So this nice drop here would have given everyone the opportunity if you'd have wanted to come out. Yeah, and we'll go through gold after we've gone through this, and then obviously we'll go through our pairs afterwards. I was happy. I did really really well on gold yesterday. So I was happy to swallow the kind of L, it's all part of trading. You've got to sometimes, swallow, yeah, what's happening, but still obviously not happy with this. If you look at and I think this explains how tricky it is, so we had probably over 70%. I had one, two, three, four trading days out of nine. So let's say 11. So my overall win rate, and I do think that you need to keep an eye on this because It's quite interesting actually because obviously we've had an all grain month happy, most of this has been gold, which has been really helping us. But obviously win rates haven't been as high. If we go back to July, they're obviously a lot higher. So we obviously had a lot more in the 80s, in 76, 80, 80, 100, 80, 80, 80, 100, 70, 90, 100. All right. So that's obviously one thing that you've got to swallow. The good thing about it is you can still have a low win rate and churn out green days, and that's obviously one thing that you've got to be aware of, and you've got to obviously make sure that you achieved. So the only thing I would say about USD JPY is it's coming up to that area. So remember how important 160 was previously. That's going to be just as important, this time too. All right, so 160 for USD JPY is key. So that's obviously one thing we're going to be keeping an eye on. But I would probably stay away from USD JPY, just because it's should because it's heavily linked with yields, so yields trending higher will obviously push USD JPY higher. All right, but we are going to be due these huge, spikes to the downside because there's a lot of pressure coming to the downside. Mm. So that's obviously one thing to be a little bit wary of. Right. In regards to everything else here, Um, let's go through GBP JPY. This is a trade that I laid out yesterday. And obviously potentially one to watch out for. Well, looks like we're rejecting this here. Could kind of see a nice drop here. I gave two opportunities. If you haven't watched the videos, I think only about 40 of you watched it, out of whatever 300. So, just obviously waiting for obviously that price to hop in. The other one I gave him was GBP USD here. So I delete these bits here. This was actually spot on. So I gave, three entries here. All right, three entries, one entry here, two entry here, three entry here. What's happened? We've tapped this entry here and it instantly rejected. So anyone who was actually monitoring this, there's a nice, obviously 30 odd pips here. Stops would be at break even. Expectation is for this to trickle to the downside. So, not too bad. Obviously, gave you guys this breakdown for free. Remember, if you want me to break down any more stuff, then obviously I'm happy to do that. So my three currency paired trades that I took or have had all set up today. One is Aussie, expecting this. I wanted this just to pop down. I'm playing everything a little bit, safer. When I looked at our trades from yesterday afternoon, we added in GBP USD, Euro USD. They did trigger, and they would still be, or they triggered later on. I closed my triggers, but if you'd have left them open, you would be in profit. So I'm going to leave these ones open. We're going to wait and see. If we look how active Asia's been, it's been pretty small. So I'm hoping this London session gets tested, and then potentially might, see a bit of a boost up here. We then got GBP USD. I don't know if I think that might have. Yeah, we've had GBP USD trigger. All right, so just expecting this to drift up into this area. We've got our yeah, just wanted it to drift up. We could have gone slightly higher, but I wanted to play this a little bit, safer. I have extended stops, slightly because I want to let things kind of swing. But obviously expecting, yeah, a push to the upside. If we look at the dollar overall here, it's pushed back above 99,500, but I do think there's probably a higher probability of us coming back down and retesting this 99,500. We then got Euro 2. I played this one a little bit safer. If we look, our tops here was obviously this uh, bottom where market opened. I wanted this just to close before we obviously look for this upside kind of movement. So let's wait and see what happens on that on there too. But I'm pretty happy with both those entries. So gold, let's do our usual routine. We've been doing really, really well on this recently. So we have got previous daily high. Just mark it up. Previous daily low. All right. So that's in yellow. Then we've got our Asia. So we got Asia high. I'm going to mark that one. I'm going to just make this a bit small. I don't need these as long. So let's make these in blue. Let's shorten this one a bit. And let's shorten this one a bit here. Right. And let's do our Asian low here. So Asian low here. All right. So currently, this is obviously what we are looking at here. Overall, kind of trend wise, if we're starting to look at this here, we're obviously trending. It is an uptrend. Okay. It is an uptrend here. So I will actually be looking probably to buy, but I don't want to buy from here. I want to buy from here. All right. I'd like to take, I think there's two scenarios here. And we'll mark out this as scenario one. We're going to mark this middle area here. So we got scenario one. And then we have got scenario two, which would be this previous daily low. I think if this gets hit, we could go a bit further as well. So scenario two. Yeah. All right. Scenario one, scenario two. There we go. Nice and easy. All right. So my scenario one, which would be my probably preferable here, I want this to come down here, and then I want it to drift up into this area here. All right. I think it is pretty safe to kind of start scaling in around this area here. All right, because I just can't see it crashing through the Asian low, then through the previous daily low. We've got this, tailwind here. We've also got yields, which is obviously what's been driving gold down slightly. Is it gonna bust through here? I mean, it tried previously, and obviously we had this nice tail off here. I'm expecting a little bit of a tail off even if we come down into kind of this area here. I'm expecting a little bit of a tail off here and a hold. So that's obviously one thing that I'm expecting. But obviously, yeah, in regards to gold, we've got this will be my scenario one. Scenario two is a bit smaller, but obviously, it would be a break, a retest, and then a continuation down to this daily low. I mean, it might be that if you really wanted to be active, you could trade by both of them. But I like to kind of, stick to obviously our plan here, of trying to, trying to make sure that we are, staying to our kind of, yeah, structure, our outlook here. So that's what I would like to, see. I'd put an alert, which I'll do here in front of everyone. I'm going to put one about here. All right, this would be my ideal place to start skating. I did it yesterday, and it worked out pretty well. I think I had about 6 entries in the end. But obviously, it's as long as you're over leverage gold, you're okay. And I do think you kind of have to scale it because, it can move so wildly. And I think if you think back to as long as you get direction correct and you're targeting the correct areas with confidence, you've got to be confident with gold. And I think it can strip you of that very, very, very quickly. So yeah, let's have a look at my NZD one. I think I broke this down here. So, look at obviously what's happened here. All right. So we obviously had two scenarios here, right? One was that, there would have been no entry here. There is no clean candle to boost here. You wouldn't have been confident to go long on any of these. All right. As soon as it busted through, yes, I'm expecting now, this to obviously come and tap into this area here. So that's obviously one that we did previously. Obviously, look how well, and obviously another one here. We drew this level on. I think it was on Friday or Sunday. Um, look how well it's holding up. We break down, we come above, we can't break through. Crazy, isn't it? It's like magic. But yeah, gold, that would be, scenario one would be my kind of favorite here. So right, I'm gonna hop into the chat and then we can see. All right, Dan, how do you decide whether to mark up on a 2 hour window or the 15 minute? I always use 2 hour, but then if I want to kind of hone in an entry, I always think, mark up on the 2 hour, right? But then, if you're looking for obviously a candle entry, you want to be doing that on 15 minute. All right, because that's your kind of that's what the lower time frames are supposed to be for. It kind of zooms in. You've identified an area and then you're, zooming in on obviously where you want to enter. Yeah. All right, so that's how I'd utilize them. VP, I know you may have shared this, but is there a video on gold layering, or is it on a specific morning or evening live video? Sorry to ask if someone uh, already has. I mean, I'm making it pretty obvious here, in regards to, what I'm kind of doing here. So you obviously, when you're, and this might not happen, but when the thing about gold, don't just start entering from a random spot. You don't understand with gold. You have to be pinpoint. All right. But it's like, my basket strategy. I've just adapted it onto gold, so rather than you being like, yeah, you know what, I think 380's gonna get hit. It's playing a big part. You're targeting this line here. You might enter one, a lot, but obviously price might swing down here. Where all I'm doing, well, whenever I trade, I make sure I change my one line to an area. All right. So I'm splitting this area up, but actually in turn, I'm kind of reducing risk, because I've got, entries here. If I don't like it, you saw it on USDJPY yesterday. Not our best trade, but we had a chance to come out of it if we would have wanted to, So, and actually, if you look at all of our trades, which might potentially hit, stop loss because you enter within an area, price will always give you a chance to come out. It's very, very rare. It just blasts, straight through everything. And if it does, you've allocated all I like in trading as I've got older, rather than targeting a, line, right? I always like to actually let's do it using this. So rather than targeting a, line, all right? I always like to target, and I think you're going to have a lot more luck targeting an area. All right. But because if you think about it, right, if price comes here and then goes up, that area hits, yeah? All right. If a price goes, here, all right, yes, your line hits, your area hits, yeah? All right. If a price, all right, goes like this, right? It comes back down, it comes down here, then it does this, potentially might do something like this, and then it goes, yeah? All right, you've got so many options here because actually, line, you're in a tiny bit of profit here, area, you got profit, profit, and a bit of loss. It doesn't matter how you do it. And then let's is this one here. all right, you're always gonna benefit from entering in an area as opposed to entering, on just one, level. It's like anything, if it like say for example, I'm trying to hit a green, all right, a golf. If the green's like this, or if the green's like this, which one have I got more chance of hitting? This one here. So why nobody uses this in trading? I don't know. So yeah. Let's have a look at if there's any more. As we are very news related chart and hype, do you always buy on discount news? Or if you jump on, how do you get in? What do you mean? Um, so I'm identifying the overall, kind of outlook of obviously, what is happening. It can change it at any time, and it doesn't matter if you're intraday, it doesn't matter if you're, swing trading, scalping, you're gonna get caught if outlook changes. Um, but yeah, jumping on, for example, candles like this one here. So if we were to highlight this candle here, right? Let's have a look here. So if we highlighted this candle here, we go on like a 5 minute. You'd have to go on a one minute time frame. All right. And then you've then got to think to yourself, where would you enter? Right. And why would you enter? Yeah. So it's all well and good, wanting to obviously hop on a big candle, but the thing you've got to, I mean, there is nothing wrong with, lower to time frame trades. Are lower time frame gold trades did really, really well, but obviously, you've got to expect losses, because the trend isn't clean. All right. you know and I think it's just traps here. So yeah, but obviously, like here, for example, you wouldn't want to enter until, potentially you might want to wait for this level to break, or you might want to be really safe and wait for this one to break. How you trade's no different whether it's lower time frame, intraday time frame, but then obviously, if you got to think of how manipulated the lower time frame is, because this move here would put everybody off here, because you'd have waited for this to go, all right? You'd have waited for a nice retest and a continuation, something like this, but it would have blasted straight through. So everyone's then thinking, right, you know what? It's now going to retest this and continue, blah blah blah. It's messy. All right, so it's so that's why I would always, and it's just how, yeah, I guess what I have the highest probability with, is that I'd like to, yeah, I'd like to set up my charts on an intraday time frame, and obviously then, look to capitalize from there. Um, VP. Thank you. So essentially between 4390 and 4368 is a potential buying opportunity. What would your stop loss be from your analysis? So the stops have to be a bit free because you're, scaling in. But yes, if this previous daily low breaks, then we're obviously looking. There's two kind of, two safety nets here. Yeah, which have completely gone. So you don't have any more until you hit down here. So there's no point holding. Yeah. All right. So, that's obviously what I would, be looking at here. So any kind of clean break, any kind of probably 15-minute break below here, I'd be looking to come out. So yeah, but right, I'm going to hold this off here. I hope everyone's enjoyed it. Make sure you comment on the video if you want me to break down any random pairs. I'll do two more today, and then obviously we can, yeah, see how how those get on. But hopefully you're enjoying me obviously breaking them down and it's helping. So yeah, right. Have a great Tuesday and let's go, team.